Hello, my name is Stefan van Woenzel and I am the author of the book called Oil Traders' Words. This is the book. It's a nice thick book, 574 pages. It's a book where I describe from my practical experience, 30 years in the business, all the definitions, all the wording that oil traders and operators and refiners and brokers are using on a daily basis. A part of their common talk. So, what am I describing? Just as an example, is arbitrage. What is arbitrage? Arbitrage is actually the differential between two geographic areas, two trading hubs in the market. So, just take an example. Something that I traded before is fuel oil. I used to buy fuel oil in the Russian market and then I sold it into Singapore area. So then I had to be involved in the Northwest European market, the barge market, and I had to be involved in the Singapore market. Two different markets with two different price settings schemes. Then, of course, you need to think about the price you can buy of the physical oil in the Northwest European market and the price at what you can sell in the Singapore market. That is the ARB. That is, you can calculate that. You can calculate the difference. And what you need to keep in mind when you bring something from Northwest Europe to Singapore, that it takes about 41 days to sail a VLCC from one place to the other. So you're not only looking at the ARB as such in the same period, but you need to look also a bit further out in time. So you get a combination of the time structure and ARB, which makes your decision to decide if you want to do a business, yes or not. So if I buy something in June in Rotterdam, then I would sell something in a contango market in August in Singapore and lock that in. I buy my paper in Northwest Europe, I sell my paper in Singapore. So what I do, I lock in my purchase price in Rotterdam and I lock in my sales site in Singapore. There's only one but, because there's also differentials. Sometimes you buy qualities which needs a differential. You would buy an M100 cracked fuel oil, you'll probably buy that at a Platts price minus a little discount. And maybe in Singapore you can sell it at a Platts Singapore price with a little plus. Or maybe you have blended something in it and you get even a better price. That's just your optimization on the quality. So that's the differential. But of course, you need to think about the financing cost and the shipping cost. Because you need to have a VLCC to sail the oil from one place to the other. And what is the price of the shipping? So the ARB is a differential between the markets. And maybe that's a $20, $30 differential. But then you need to look at what is the cost for a VLCC. Do you pay $10 per ton freight? Do you pay $15 per ton freight? And what is the financial cost? And then something what you should not forget is other costs like demurrage. If you have a VLCC, it takes time to load. It takes time to load and that will cost money. And also at the discharge point, there is a risk of demurrage. Plus that in Singapore they prefer often to have discharge figures as a commercial figure. Well, you have the BL figures in the West Europe. So there is also a reason to be a bit conservative and take some cost into account. But if you take all the costs and you look at compare it with the result of the arbitrage, then you would see if there is a profit. And if you see a $4 or $5 profit, well, maybe there's a good reason to start acting and to start preparing for an arbitrage. Then you take a vessel, you take it on subs, you have to start looking at hedging the position, because a VLCC is a 280,000 tons, so if you're 280,000 tons in the market, you will move the market and you will close your own ARB. So you have to start maybe already a bit before you take the position, just take the paper position. And you must have access to oil. If you don't have access to oil, don't start with it, because people will see you immediately. So I would always say just try to get at least half the cargo guaranteed access. So you cannot do it private because nobody will give it to you. It is really something for the bigger oil companies. But just look at your trader when you're working in operations. Look at the trader. Look what he's doing. And not all the traders are doing, but there is quite a lot of business going on. People always looking at ARBs and creating the value of the product in their local market. It has an effect. So it's an interesting thing to do, and it's fun, and it's even more fun when you make a lot of money with it. Yeah, that is one of those words, arbitrage. Just I try to explain a little bit how it works. Of course, I mean, say it in a kind of snapshot, and that is exactly the meaning of this book. It's all definitions with snapshots of all the definitions, just to give you the good idea and the good direction on what does it mean, what can I do with it, what is this trader talking about with all the discussion. So if you're a junior, a senior, a trainee, and graduate, if you are working in shipping, ops, wherever, even if you're a manager, because I can tell you a lot of managers can use this book as well. So just go to Amazon.com or Google my book on Google and find it on All Traders Words. Then maybe you should take the decision to just buy one. It's not expensive, and just do it. Should be on your desk. Okay, I'm wishing you a very nice day today. It's sunshine in Stavanger, so I'm gonna have fun. Thank you for your attention. Bye.